What you're about to see may disturb you.
All right, hopefully what we're going to bring up doesn't disturb you, but if anything is quite revealing. And the topic for the Snooze You Lose segment is going to be specifically around car purchases, new and or used. And I'm going to go through the data points and the data will speak for itself. But I want you to consider, when was the last time when you went shopping for a car, new or used, you looked at any type of market data to decide if now is the time? Most of you just go, well, my car's broken, or I feel like now is a good time to buy my car. And rather than making an educated decision on if now is the best time, you just went in, jumped in and did it, rather than harnessing the potential of saving thousands of dollars, large percentages in your total ticket value, and maybe even deciding whether you should buy new or used completely based on market data, not off of intuition or how much money you have in your bank account. So let's go into this, and I'm going to bring up some data that you just cannot ignore when it comes to this. Let me bring up this data that comes from Cox Automotive. And what we're looking at is inventory in days that dealerships have. So this is the amount of days of inventory dealerships are predicting they have based on various brands. And you can see highlighted that from Toyota all the way to Lincoln, there is a amount of cars available into the future that are already sitting in inventory ready to sell. And you can see Toyota is ranked the lowest. So if you're someone looking to buy a Toyota, their inventory is pretty small compared to some of these other dealers. And so their willingness to provide discounts, their willingness to provide incentives to get you inside of that car is a lot less, because either they predicted the market really well and they didn't overstock up on cars, or maybe they're a brand that's doing really well, and or the cars on the other side got some bad recognition, bad branding, and now they have car lots full of cars, and to offload them for next year's models, they're going to have to start providing some discounts. And so just look at this. You can see that car companies like Toyota, Honda, Lexus, Land Rover fall in the top 4 with under 50, even 57 days of inventory. Meaning that if they stopped making cars today, it would take them up to almost 60 days to get rid of all the cars they already have. Now, no one likes to do that. Everyone likes to keep manufacturing cars so that they can keep reselling them. But the fact that we're already into 2024 and there's almost 60 days worth of inventory, this is massive. And this is a massive problem in the industry, as the percentage of inventory has gone up, even in some car dealerships, up to 50% higher than just a year ago. So demand was way up here for cars the last 2 years. Supply was obviously limited, and it made the sticker prices go up. So what is the rule of supply and demand? More supply, prices drop, right? More demand, prices rise. And so as we see an increase in supply, what can you expect to see this year in car prices, specifically new ones? Well, if you're on the left side of the spectrum, Toyota, Honda, Lexus, Range Rover, Kia, Cadillac, Chevy, you're going to see less discounts, less incentives for those new cars. Now, if you go to the far right of the chart, Mazda, Nissan, Infiniti, Volvo, Genesis, Lincoln, they have an enormous amount of inventory. And almost on some of these 133 days, that's half a year's worth of inventory just sitting in lots right now. They're not going to be manufacturing any new cars. And so to get the wheels going, they're going to have to start lowering their price to get these cars to move off the lots. And so the manufacturer will offer dealer incentives, whether it's through internal financing, sticker price discounts, free oil and change for life, longer extended warranties, you name it, they're going to start doing crazy things to get these cars to start moving. So just off of this chart, what can you say? Well, I might change what type of car I'm interested in buying because I'm going to get more value from the dealer because they are stocked up and they are kind of feeling the pressure to start getting these cars off the lot. If you're thinking about buying a Toyota and you're just committed to that, you're not probably going to see a big incentive from the dealership to move this down. But if you're over on the right and you're going, you know what? Instead of getting a Honda or a Toyota, I might consider a Mazda. I might consider a Volkswagen or a Ford or an Audi. Well, you might be better off buying a Ford versus, and no offense to our truck friends, than a GMC or a Chevy. Why? Just mere fact that they have more on inventory and they're going to create incentives to drive the price down. So you might get more value out of your purchase in a new car. Now check this chart out. This shows the overall national transaction price for a car in the US. And you can see what happened. 2001, after COVID and all these stimulus checks, lots of money pumped into the economy because of all the stimulus, and people, frankly, just buying with low rates, things that they probably didn't have. You know, a lot of people have not just one car, two cars, three cars, four cars now, and three of them are sitting around doing nothing. That happened a lot during COVID, and it caused, because of this demand supply thing, it caused the demand to go way up, which caused the average national price to go way up with it. Now, this is interesting, and most people don't know this data. If you look at the far right of the chart, we went skyrocketing from 42 to even $40,000 average price car to almost $50,000 average. Right now, we're sitting at $47,244 is the average ticket price for a car being sold. But this price, if you look over the last year and a half, has not gone up. It has gone down. And so if you bought a year and a half ago, which, by the way, if you remember, almost 2 years ago, I came out publicly and I said, look, if you're looking to buy a car, right now is not the right time. Inventories are at all-time highs. We're seeing interest rates going up, which is going to put pressure on people's affordability to buy a car, right? Their monthly payment would go up. And overall, this was going to drive a kind of a crush on the car market over time. And we've seen that over the last year and a half. Prices have gone down for new cars, period, in conversation. What do I think is going to continue? I think we are in a trend. And because rates have not yet gone down, and when they do, they're only going to go down in little quarter point increments. And we're kind of feeling this stagflation where people's wallets are still feeling it. Gas prices are still at all-time high. Affordability hasn't gotten any better. My belief, based on this data and the chart before, is that overall demand is going to continue to drop. And we have this huge amount of inventory, in some cases up to 50% more than last year, that cars are just sitting on lots. And so this is going to be an optimal time, if you're looking to buy a new car, to get a new car and get a great incentive. It's already happening right now. We're seeing incentives go up. And let me talk to you about this. So here is a chart that actually shows the evidence of this around incentives. So the blue line that you see going across is the average incentives that dealerships are putting out to get cars moving. And the yellow is the chart we just saw before, the average price. And you can kind of see this crossover where in 2001, dealers are like, why are we giving incentives? The demand's through the roof. We're moving cars without people even seeing them. They're buying them before they even show up. You guys remember that? Same with houses. And so incentives dropped to almost nothing. Like incentives went down to like 2%. You can see the percentage on the right-hand side. Well, since 2003, we have seen incentives start to rise. And what normal incentives look like is up in the 10, 9, 11 percentile, as you can see back in 2020, 2019. And you can see that we are clearly going back into that chart. Now, if I were just looking at technicals, this is what I'd be studying. I'd look at the trend. of the average price and go, are we inside that trend? And the question or the answer to that is no, we're not back into the old trend. So it's very likely that we'll end up back into this old trend of prices going up, which should bring the price significantly down average for the average car sold in the US. And are we back in the old trend for incentives? And the answer is no, we're not. And so it's very likely that we'll end back up in the 10% time. Now, how fast can this happen? Well, you can see in 2021 to 2022, it took about a year for the incentives to drop from about 9% to 2%, so about a 7% drop. It also took during that time prices to go up. If we go back to this chart, prices to go up from about $40,000 to $46,000, about a $6,000 change average per car in about a year. And so if you can wait, it is very likely that you'll see incentives go up like drastically, probably 4 to 5%, and you'll see prices drop probably $4,000 or $5,000. I mean, that would be my guess just based on technicals. And so is now a good time to buy? Well, it's definitely better than it was a year ago. Are the incentives better? Incentives are definitely better than they were a year ago. So where are we going to be sitting around all this? I think the answer is pretty clear. We're going to have, we're in a trend, and it's likely going to be summer. If you can wait till fall, you'll probably see some of the greatest incentives and drops in price based on this data. So if you can hold off, if your car can get fixed, if you can just get that cheap part and wait a little while before jumping into your next new car purchase, now seems to be the time. Now, a lot of you are going, well, Matt, I never buy a new car. And if you're like me, I'm the same way. I don't like buying new. I like buying used. There's something about buying new, and the day you take it off the lot, it depreciates a ton of value. So I have kind of a tip that I'll share with you that I do with all my cars. I'll always buy used, but I always buy within at least a year of the warranty. So I like to have at least 1 year warranty left in my used car. So if anything happens, I can always take it back to the dealership and it's like new, right? So I save a ton of money doing that. That's just a personal preference. It's been something I've done for years. What about used cars? Well, let me show you the used car data. Well, average listing price for used cars has started dropping, and this goes all the way into March this year. But if you go back to July 2021, we are still not back to the low or the 24,000 range. We kind of went through this COVID spike. We're coming down into this place. Do I think used cars will likely drop and maybe flatten? I think we'll see it happen there first. I think you're going to see the bottom of the used car market bottom out first. You're going to see the levelizing of it first, and then you'll see new cars kind of follow that. So if you're looking and you like to buy used like me, should you wait? Well, we're in the trend of yes. Like, we have not seen an uptick in the average used vehicle listing price since April of 2023. So it's been about a year of declining prices. Do I think that trend's going to continue? I do. And it will probably bottom out first on used cars and then move into new. But either way, the data is good, guys. New and or used, if you're buying, prices should be lower. If you're a dealership, this is not great news, especially for sitting inventory. So there you go. There's our wrap up on used and new cars. And isn't this cool? We're using charts, we're using data, we're using technical analysis to help us with just everyday average purchases, right? I mean, we're not buying a car every day, but this is stuff that you can do that once you learn how to trade and you learn how to look at charts and read data, you can position yourself in any market. It doesn't matter what it is. And specifically markets where you're making a large purchase is now the best time.